Started. Thank all of you for showing up on game day weekend. This is the fifth in our series of speakers with Boardroom Insights. As normal, if you would make sure that you would shut off your computers, take cell phones, any other kind of electronic devices. We only have two more speakers left in the series, so I wanted to give you the next two dates. It is next Friday and the Friday after. And that will be the last two opportunities for a Boardroom Insights speaker. So I would ask you to write those dates down. So we have three in a row, today, next Friday, and the Friday after that. Now today, we have Reggie with us today. She likes to be called Reggie, so I'm going to use that. She's got quite a background, and I'm really going to have to read from this because it's very extensive. The most important thing I'm going to actually say first and last, she is a graduate from the University of Notre Dame, and we're very proud of having her back here to speak for us. She's currently the COO for Global Markets, Capital Markets of the Bank of New York, managing product and business strategy, e-commerce, and operations control, including risk, finance, legal compliance, IT infrastructure, facilities, and accounting functions. She leads the development of overall objectives, policies, and strategic plans to address the group's domestic and international and geographical challenges, piloting change management, thought leadership initiatives, and providing new insight into the new and emerging best practices. Prior to this opportunity, she was the CAO of the Mellon's Financial Markets and Treasury Services, where she was responsible for employee engagement, marketing and market research, sales planning and development, and learning and development. Prior to that, she was in England, United Kingdom, where she served as a servicing CAO responsible for global strategy, quality assurance, facilities maintenance, budget planning, learning and development, and the primary interface with corporate business partners, including communications, HR, legal, accounting, risk, and compliance. So as you can see, she's got a very broad background and has touched all aspects of the business. Also, while in London, Reggie held several other positions: head of the European Client Management, head of Country Management for Europe, a member of the EMEA Executive Committee, the list goes on here, European Risk Committee, co-chair of Global Investment Services, director of BNY Holding Limited, member of the BNY Hamilton Funds Board, and a member of the Prince Trust Women's Leadership Group. She's currently a member of the BYN Mellon's Operating Committee, CAO Roundtable, Global Diversity Council, member of WIN Executive Committee, and chair of the WIN Executive Leadership Skills. Looking at on her community service side, she was chair of the New York City's Region's Global Giving Campaign and served as the chairperson for the 2009 New York City Making Strides Against Breast Cancer Walk. She's also a member of the Children's Bellevue Hospital in New York. She serves as a member of both the Women's Bond Club and the Thomas Reuters Client Advisory Board. As I said, she graduated from honors from Notre Dame. She also has a master's degree in international and public affairs from Columbia. Her hobbies include sports, golf, and gardening. I don't know where she gets all this time, but she has time to do that. And she has two children, and she lives in New York. Reggie, the floor is yours. Thank you.
Thank you. Thanks. Well, good morning, and I'm so glad to be here. I have not been back on campus since 1985, so that's a few years ago. Many of you probably not born. And as you could tell from my background, I've been in banking for the bulk of my career, 30 plus years, and actually in the same company that has evolved through acquisitions and integration throughout that period. One thing that I wanted to come up with is a theme to basically pull together my career, my time at Notre Dame first, my career, the bank where I work, the industry in which I work. And I would say the most important thing that pulls it all together is the ability to adapt to change. In order to survive in an ever-changing marketplace, whether you're a student, whether you're someone employed at a company, or whether you're the company itself, that's critical. Because as you probably know, studying all that you do in finance, if you look at the banking industry, way back when I joined what at then was called Irving Trust, there were probably 20 banks to choose from in New York City, all majors, that have now shrunk down to about 4 or 5. And this is all through mergers, acquisitions, some good choices and some poor choices from those companies. So today, what I'd like to go through is my experience at Notre Dame, and it's going to be a very different era than you're living in today. My career journey, which again spans 32 years, which is quite amount of time. The company in which I work, and then give you a snapshot of my current day job and the actual financials of the global markets business where I now work, and end up with our leadership and development program. One of the main themes through my last 10 years is building leadership programs in order to attract and retain talent. So people like yourselves who are looking for jobs and people inside the company that are looking to continue to grow. So make sure you remember, once you get that offer letter and you start working, it's not over. You still have to continue to strive and grow, try to reach the top of your grade in whatever function you choose, and really search for excellence, because that's what will distinguish you from your peers. So now, starting with 1975, which was the big year that I graduated, welcome to my world. This was peacenik time. It was anti-Vietnam War time, although at that stage, by 75, they were coming home. It was quite anti-military, so the military that did return to their home states and cities were not as wonderfully received as our returning military today, and it was definitely anti-establishment. There was also a real theme of women's lib. So on this campus, we actually had a women's newspaper that was a small group of us, maybe 15, 20 women created. We considered it very, very avant-garde, and we didn't have many readers. This is today. Welcome to Wall Street. This is the protests against Wall Street, against fat cats, against bankers, and generally somewhat, from my view, unfocused, but they're camping out in this Zuccotti Park, which is right here, 2 blocks from our headquarters. So I have the pleasure of seeing them every day. Now I'd like to test your memory or your history book of who was the president in 1975. Anybody remember? Gerald Ford? Got it. Gerald Ford. And he was in there after the whole Watergate affair, after Nixon was eased out. So it was a difficult period, actually, politically for our country. And who knows what the GDP growth rate, more or less, was at that period? Positive or negative? Show of hands if it was positive. Okay, it was negative 1.8. So it was even worse than today's economy. So, and today it's 1.3, pretty anemic, but it was actually even worse then. Percentage of unemployment, show of hands if it was greater than 5% but less than 7%. Between 7 and 10. Got it. 8%, 8.4%, today 9.1%. And again, the environment, frankly, is a little bit similar to way back when I was graduating. The big difference was I was nowhere near as focused as I know all of you are. I was a liberal arts major, had a wonderful time, but I didn't know what career I wanted to go into. So it was, I think, a different student population in that time. I'm sure you had some really focused, tick-the-box kind of people, but I didn't really know many of them. Then what were the top issues back then versus now? Well, New York City went into default, so we had to bail out New York City. Now we have Occupy Wall Street, so it's somewhat the same in some cases, because New York City, when you really look at New York City and how the finances are driven, it's really through the financial sector. So by trying to close down banks or take away profits from banks, it's not going to help New York City very much, nor any other city where financial institutions are a major participant. Vietnam War, well, it was people were coming back. Now we still have wars, but the way we receive those people coming back from defending our country seems to be much better, much more mature. Energy issues. Back when I would drive from New Jersey to Notre Dame, there were issues around gas. There were problems, a lot of conversation. Why are we so dependent on foreign suppliers? Well, here we are, fast forward, same conversations, and haven't done a whole lot about it. And then finally, we had Watergate, still the hangover from Watergate, and the women's movement, which, looking at this room and hearing the stats across campus, I'd say tick the box. We're doing pretty well there. So my experience at Notre Dame. When I started, well, actually when I applied, let me even go back to why did I apply to Notre Dame. My grandfather was a graduate, and that was in the 20s, so now we're really getting into the history books. My grandfather was such a rah-rah that on our way to church on Sunday, he used to sing "Cheer, Cheer for Old Notre Dame" as a warm-up to going to Mass. So I grew up very much around the Notre Dame spirit. I had no idea what Notre Dame was other than that, because I was living in New Jersey. When it came time to apply to colleges, I was really looking, and I'd gone all the way through my undergrad, well, preschool, middle school, high school, in all-girl schools, all-girl Catholic schools. So my goal was to find a school that was co-ed, but also had a female presence, a female space. At the time, St. Mary's and Notre Dame were actually going to merge, and this was, a major event in my head. It was going to be like a Barnard, Columbia, a Radcliffe, Harvard. You would have the best of both worlds. Well, when I first entered in that summer before being a freshman, we were asked to look at these exchange programs. And I basically decided I was always interested in doing something international, living overseas, thought Spanish was a good language to learn, so I signed up for the Mexico program. That was a Notre Dame program. So I prepared the freshman year with classes really on both campuses, lived in Regina Hall, which, my name is Regina, so I thought that was a sign of something. And then on my sophomore year, I lived in Mexico City, lived with a family, went to Anáhuac University. That year, the merger conversations fell through. So coming back junior year, I had to make a decision. Do I want to go back to St. Mary's? Do I want to go to Notre Dame? My major was at Notre Dame. All my friends were pretty much Notre Dame because I had been in this program, so I chose to go to Notre Dame. I went to live in Baden Hall. Now, take yourself to this campus, which was probably, 30% the same size, 30% of today's size, 10% were women. So it was a little bit different environment. Baden Hall and maybe one other dorm had been converted to house the women. And it was tough. It was tough. It was hard to make your way, especially coming from a background where you thought you kind of knew as much as any guy sitting next to you because I had been in that kind of environment for my entire youth. So I stayed in the government major, focused on Latin American affairs, but by senior year felt reasonably uncomfortable on campus and actually moved off campus, which was a very bad move, I admit now. I won't let my kids do it, but at the time, it just showed you the atmosphere, the environment, and I moved off with a bunch of women who all continued to achieve wonderful lives, but we weren't as integrated in the school as I know you all are today. Now, going to the career, and I had breakfast with a couple of you in the audience this morning, and I really think that everyone, no matter where you are in your career, if you really know what you want to do, or if you don't really know what you want to do, be flexible. Be able to adapt to change, because things never are a straight line. So when I first graduated from Notre Dame, I wasn't too sure what I wanted to do. So I went back to New Jersey. I really thought I needed to go to graduate school to build some skills, because liberal arts, going into business, that didn't really mesh that well. Took night school courses, taught in a school for artistic kids, and basically took the GMATs and got accepted into Columbia School of International and Public Affairs. At the same time, there was a special program that Georgetown was sponsoring in Tecpan, Guatemala, around the Peace Corps. They had had a bad earthquake, and I was fortunate enough to actually be able to go there for 6 months. So that was a year of a lot of transition, a lot of change, but then I ended up in September at Columbia. Columbia was probably the first time that, with all the passion for international that I felt here and living in Latin America, I was suddenly being able to connect the dots and find out a way I could actually earn a living out of that passion. And that was testing various types of businesses. I was in a commodities trading company. I was at UNDP. I worked at General Motors in Chile, testing and tasting all of those career paths, and then really hearing a lot about banking, because in those days, these big banks in New York all had executive training programs, and that helped you get a leg up if you wanted to stay in banking or if you wanted to continue on into another career. So that's what I chose to do. Then the banks, in those days, again, this executive training program, but some were much more international than others. So the company I joined was Irving Trust, which was about 50% of its earnings coming from international, versus Bank of New York at that time, which had about 8% coming from international. So a very, very different focus. Irving was a banker's bank, so we were correspondent banking. We sold cash management, trade finance. I started out in Latin America, and then in 1982, the debt crisis hit Latin America. Mexico defaulted. And I remember it well because my husband and I, who's sitting up here, were on our honeymoon in Greece, and I'm reading these headlines. I'm thinking, oh, great, I'm going back to having a workout kind of job. And I had spent the first couple of years out selling and developing markets. So luckily, my boss at the time was asked to move into the European area, develop our Southern European business. He took me along. And then I really focused on Europe for the next 2 decades of my career. I'd say another most important move was back in the mid-'80s. Here I was, Europe division, but we were changing our product mix. So back to this idea of be adaptable, find a passion. For a company, it's the same thing. It has to adapt to the changing world. It has to find its niche. And then Bank of New York was moving aggressively into the security side. So you had the cash management, you had the trade. That was basically a diminishing, very commoditized group of products. We were moving into securities. Securities as an investment vehicle. Behind those securities investment portfolios, you needed a processor. Someone would keep the books and records. Someone would hold in custody, et cetera, et cetera. So we proceeded to make a series of acquisitions. One of the offshoot businesses we tried to get into, which I have to say wasn't a great success, was getting into commercial paper, underwriting and sales. So I had a short stint in London, 6 months, trying to learn about the commercial paper market, getting involved in selling. But when you had a company that was really just starting that, trying to compete against major players like Goldman or Merrill, it was an uphill battle, to say the least. So then sort of fast forward about the integration of Bank of New York and Irving. It was a hostile takeover. So again, for those of you who have read the financial history, it was pretty unique for that. There weren't many of those, particularly in the banking sector. It went on for 2 years. The good news is during those 2 years, I actually started our family. So we had children in '89 and '87. So that time of significant transition in my job, I was more a mom than possibly focused on work. Then we had a lot of turnover of management, and we came to a steady state. 1992, a senior executive came in to run our European business. He was well established in the company, and really from then on, it was a good 10 years. And that 10 years, I was building out our activities in Europe. In 2000, when he retired, actually took his position in London, and that's when I was really running all the front office business and sales activities for our European bank and financial institution clients. So that's a lot of information in a lot of years. Another significant turning point was in 2006. Again, the world's changing, a lot of transition. Our businesses are becoming more and more complex. We're trying to break into many new markets. The CEO or head of the business sometimes could be overwhelmed with all of the administrative infrastructure, all the discipline you needed to put around that strategic sales plan. So a new kind of position was created called Chief Administrative Officer, which essentially partnered with the CEO of the businesses to help them with all of that, everything behind a sales strategy. And that's what I did for asset servicing. I was still in London. Then we had the merger with Mellon. And at that stage, I was very interested to come back to the States, both when you're in a merger situation, it's always very good to be close to a headquarters. Secondly, I'd been there for a long time, 7 years. And thirdly, my kids were going to school in the States. So really, the transition made a lot of sense. To get that next job in the midst of a merger, even though I had been in a company for, at that time, 28, 30 years, was hard. I mean, I had to apply. I had to be like any guy walking in off the street. And when you're merging two cultures, you have preferences depending on the senior executive that make it to the top of whatever that discipline. So one thing that's critical throughout your career, whether you're in a good time or whether you're in a difficult time, it's continue to make your contacts and your network because you never know when you're going to need them. And luckily for me, I knew enough people that I could reinvent myself, come back to the States, and I moved into a CAO role with issuer services, which was a whole other side of the bank, a growth side, and it was a great experience. And then up till now, here I am, a COO of global markets, and that is a job that really was created from nothing. We didn't have that function when I first got here, nor did we have the two CAO roles before. So again, even though I had been working all those years, each of these job changes, you found a new part about yourself that really drove you, felt passionate about. And creating something from nothing, building an infrastructure, attracting and retaining talent to your new team was a critical thing for me and really kept me going. So the bank. Our bank is global. I'm just giving you a couple snapshots of where we have offices, although we have 36 offices around the world. We deal in 100 countries. As a global custodian, we deal in those countries through sub-custody partners, a sub-custody network. So Paris, of course, I'm sure you all know where Paris is. We have a bank in Paris. It's a very important hub for our depository receipt business, where we have a market share of about 70%. Dubai, even with the turmoil and upset in the Middle East, it's actually a very important growth center for us. Dubai is our hub. The important thing about the Middle East is our focal point is around the central banks and sovereign entity funds. And in many cases, not all, but many of them have survived the turmoil. Here we are, Seoul, Korea. I actually have a trip there in a couple of weeks. It's one of our larger trading centers in Asia. And it's actually part of a series of acquisitions we did way back with Continental Bank, which probably, again, you have to look in your history books for that one. But we bought their corporate banking business there about 20 years ago, but diversified it and built it out into our current model. Rio de Janeiro, we have about 450 people in Brazil. We have a good combination of businesses, asset management, it's called ARCS, asset servicing under a fund accounting business, which has about 350 people. And we have then small sales teams from wealth, from corporate trust, depository receipts, and cash management and trade. This is New York, looking in from Brooklyn, and this is our headquarters, one wall. Again, 2 blocks from Zuccotti Park. So I think I'm just going to pause there before I go into what is our niche as a bank, how we distinguish ourselves, and our focus going forward. If people have any questions about that sort of career journey, Notre Dame experience, and anything else I talked about. No questions. Okay. So when we look at the company and what is our niche, what makes us different? If you look at analyst reports, I don't know if you, after every quarterly earning, analysts always come out with an analysis, good, bad, indifferent, buy, sell, outperform, hold. Our bank is often compared to the trust banks. Now, what does that mean? When I was sort of going through the evolution of the company, we started out, and again, I'm taking the component parts as if they were always one piece. When we started out, we were really a correspondent bank and a U.S. lender. Mellon was very much a U.S. lender and an investment manager. Putting those companies together, we're more than a trust bank. So when you look at this diagram, the trust bank activities are the first 5 pieces there. Well, it's really the first 4. So you have your investment management, you have your custody, and that has a lot to do around asset valuation and data gathering. You have all of the administration and accounting around holding those securities. And of course, this can be extremely sophisticated as we become more and more involved with hedge funds. And hedge fund, we have an alternative investment services group, which is hedge fund administration. And we're number 1, 2, or 3, depending on the category that you're looking at there. And then we also have an outsourcing business line. Again, all around this administration, all around the investment servicing activities. But smaller companies, again, hedge funds are a case in point, that do not want to build the infrastructure to do their accounting, to actually trade their foreign exchange, to do a lot of this infrastructure activity that the servicing businesses will give to the client. We pull out their back office and do it for them. In some cases, we lift it out and we actually keep the people, but have a management oversight and give them new technology. In some cases, they literally just give us all the workflow and we do it. But in addition to these trust bank activities, and looking at these columns, that's where you see the other 2 trust banks, State Street and Northern Trust, how we really are very different. It's that last category. Issuer, clearing, and payment services. And that was actually the group I was part of in FMTS, Financial Markets and Treasury Services, where it's a very fast-growing business in the area of depository receipts. Although cash management could be considered somewhat commoditized at this point, it's still really growing if you're innovative with your products and services, and if you continue to go global. Making payments in Very exotic currencies is a difficult thing to do. It's not a push of a button. You have to deal with all the regulatory environments, the inability to have overdrafts in your local accounts, et cetera. So there's a lot of technical skills that you must have to do that, perform it well, or you can be shut down. Corporate trust, which is a large issuer activity that we bought the global component of JP Morgan back in the mid-90s and have continued to expand that business really up until today. And it's doing quite well. And then you have the clearing services, where we actually clear 70 to 80%, sort of giving them the quarter, of the US government debt. So this is clearing treasuries, bonds, et cetera, so 70 to 80%. Our competitor there has been JP Morgan, originally was Chase. We were more a 50-50% kind of split, but we've gained significant market share, and that's really since the crisis in 2008. A lot of the reason for that is this focus on core businesses. You have your strategy, you have your core focus, you build out new innovation, and you win market share, even in a tough environment. Now back to the concept of you have your strategy, you drive your execution, and you want to outperform. You want to gain market share, you want to reach some level of excellence in whatever the discipline is. So along these core businesses that we're in, we're like 1, 2, or 3 in most of them. And those businesses were not, over time, if you look over our history, we've actually opted out. We've sold out that business. So as an example, back several years, we used to have a retail branch network in New York. We had an upstate bank, small community bank network, upstate New York. We opted to either close out or swap out of those. The retail network, we actually swapped with JP Morgan to get that global custody business, but there are many stories like that. So it's having a focus, a strategy, but being able to be adaptable and have the ability to change when the markets change. And if you aren't able to keep up with the competition, have the strength of character to say, okay, I'm going to put that resource, that technology, that funding into the products and services that you actually achieve well in. So it's somewhat a matter of survival. And in this business today, it's going to be even more so with the increase in the regulatory environment. So now I'm just giving you a little snapshot. If you read recent third quarter results, we did quite well. Revenues were up 8%. This has not been true of all banks. Relative to our trust bank peers, we actually did very well. This was being driven by fee revenue. So back to some of those product and business lines that I was speaking of, depository receipts. When people are investing in multiple equities around the world, the depository receipt facilitates that investment. It eases, being able to convert your income into dollars and into other currency depending on how the DR is established. That's been a real growth area. Another area that has had a lot of interest and expansion is in increase in net interest income. Now, what that means is because we're so highly rated as a company, people go to a safe haven with their deposits. They think that putting their cash at Bank of New York Mellon is going to bode them better than if they put it at XYZ Bank that has a much lesser debt rating. And with net interest income, you bring in the balances and then you invest them elsewhere. However, in a low interest rate environment, you have to be pretty sharp to actually invest it and reap the returns that you really want. So even though that's going up, we have to be very careful how we invest that money, make sure it's safe, but make sure the returns are decent as well. Now, setting the tone of banking in general and BNY Mellon in particular, you really have to have an eye on expenses and how expenses are controlled. In today's market, with the increase in regulation, I'm sure you've read about the Dodd-Frank coming out, VOCA rule coming out. This is going to require significant increases in technology, in compliance, in legal infrastructure, and in systems in order to be able to speak to these new clearing counterparts out there. That's a lot of money going into things that are not producing revenue. So it's something that you need to watch very closely. You've got to be smart about how you set that infrastructure up. You have to be probably focused on creating utility, so every business line that needs some kind of a regulatory reporting tool isn't creating it separately. So you pull it all together and have economies of scale. But it's definitely, as you're looking at the banking sector, that's a category to watch. How is the company handling expenses? Currently, our company is also dealing with litigation. Now, for those of you who have read much about the various things that have come out in the Wall Street Journal in the last several weeks, we have litigation expense in there as well. And again, it's something to really watch and to focus on as you're looking to join a company. Make sure it's strong and well managed. And then one other statistics always to look at is your operating income. So a 200 basis point operating income, revenue to expense type ratio, it's a very important thing to look at to see how well managed a company is and how much they have to invest in the future. So as I mentioned, from a ratings perspective, we're very highly rated. We are more highly rated than our competitors. This is what's attracting a lot of the balances. This is also what's attracting a lot of the new business to the company because they feel it's a safe haven. And in this kind of difficult period with markets very volatile, that's an important thing to keep that reputation. We're very global. Now, looking at our trading floor environment, we have 10 trading floors around the world in 3 continents. They all manage niche businesses in a sense. Their clients are the local clients, but then, of course, holistically, they're handling the trading book. And the company has about 36 offices around the world, which are banks, rep offices, very much sales arms. So if you look at those sort of main categories, investment servicing, investment management, and when you sort of break out the ratio, we do about 1/3 of our business in investment management, 1/3 in investment servicing. And the investment servicing combines both the custody as well as that issuer services business I spoke of before. They're all growing, many of them growing in countries outside the traditional ones, so outside the US, outside Europe, very fast growth in Asia and in Brazil and Latin America in general. A lot of these offices, too, we get back to the regulatory environment. We have established them as a bank as opposed to a sales rep office because of a regulatory requirement. We can't hold deposits. That would be part of the mix of a corporate trust relationship. So we had to open a bank. That costs a lot more money than opening a rep office. So, as you start looking at the infrastructure you need to build out into key markets, you have to make sure you understand all of the component parts. It's not just your sales revenue. It's what's the total cost of doing business in that country. So I'll pause there. I don't know if you have some questions, conversation about the banking industry before I get into global markets. Yes. And would it be possible to speak at the mic so people, because this thing's being recorded so they can hear you, if that would be possible? Thank you. I know it's awkward.
Is it on? Okay, perfect. You were talking a little bit about the Dodd-Frank. I know the Basel agreements are coming out, and it's really, you can see that, I've already got like a $5 fee on my debit card every month that I'm not happy about. So what do you see as the trends right now for the banking industry with the increase in the fees? And I know at one point, I think BNY even tried to charge a fee for people who had like a certain amount in their like savings accounts, which didn't go over too well. But what are, I guess, some of the trends that you see as going to happen in the future?
Well, I think an important trend is transparency, so that people who do get an additional charge understand why. What's it paying for? Mm-hmm. So I think that's a really important trend. So for banks to add the $5 charge for a debit, they probably have more infrastructure to cover, but they've got to be pretty clear on what it is so you don't feel uncomfortable about it. The idea of charging fees for demand deposit balances, it's this flight to quality. We had a huge influx of demand deposit balances looking for a safe haven. It costs money to invest that. It costs money to deal with that. The Swiss banks were already doing it, so it wasn't like we were a total outlier by any stretch of the imagination. Mm-hmm. But potentially, the way we communicated the reasons could have been a little better. But I think the key is and anyone who's here studying business probably understands what profit and loss is all about. If you don't cover your costs, you don't stay in business. And back to when I first applied into banking, there were banks called Chemical, Irving, Chase, Bankers Trust. They don't exist anymore. Their model either didn't work or they couldn't survive on their own. So I think it's important not to automatically say it's too much, I'm not going to pay it, and not ask the next question, why? And make sure whoever's charging it explains it.
Okay, and just as a follow-up question with that, right now I know banks have a problem with almost like having too much cash on their balance sheet. Like kind of going like, what do you see that in the future as, do you see something changing in order to kind of like, to help you as a bank or to help the banking world control that cash and then be able to get the return necessary?
Well, it's a question to your reinvestment strategy. So, too much cash means you have to think a little harder how to use it, maybe. We're doing actually stock buybacks and things like that, which help to use it, and we think it's a smart investment since our share price has been pretty low in the last several months, and it is going up, so that should be a smart investment. And it also redistributes it to the current shareholders if the stock price goes up. So there are things you can do. There are other areas that you can look at investing in new locations. One thing that we've been looking at is Brazil, to potentially buy a broker-dealer, set up a broker-dealer, set up a foreign exchange trading operation. It's still in the petri dish, but ways to invest that money to be safe, but to be smart.
Thank you.
Any other questions out there? No? Okay. So now I'm going to go a little bit more into global markets. So what's global markets? When I first arrived, we used to say global markets and capital markets. Global markets meant derivatives and foreign exchange. Capital markets was the broker-dealer. What we've been trying to do is rebrand it to say global markets is composed of 4 distinct businesses: foreign exchange, derivatives, capital markets, and BNYM Clearing. Now, BNYM Clearing is a new entity, I think 12, 16 months old. It's all part of the move forward under Dodd-Frank to the requirement to clear your derivatives. So it has a clearing capability. And our expectation is, again, as a safe haven and a well-known securities processing entity, it's going to attract a lot of these other companies or banks and financial institutions that need to clear their derivatives. So we look at that area as a big growth area, but it's new. It's still somewhat of a startup. So when you look at those 4 distinct businesses, by far, foreign exchange is the largest. The reason it's the largest is it's going back to its strategy and going back to its niche. Its strategy was to become, and this is FX as part of global markets, its strategy was to become the core for the whole company whenever a foreign exchange transaction needed to be made. So as you start hearing about some of these other product lines, global custody, well, in every global custody portfolio, someone's buying or selling a security, they're paying their incomes in another currency, they're doing corporate actions, they're doing different things that require a foreign exchange transaction. So that's one whole funnel of activity coming into FX. Another is global mass payments, so making payments around the world. Next to every one of those global payments, there's some kind of an FX transaction. If we are the payment bank for a pension fund, so say British Airways, to all their pensioners around the world, if they live in the south of Spain, they do not want to get sterling, they want to get euro. So it's that kind of translation that we do in foreign exchange. In corporate trust, as you do global bond issues, we stand behind and potentially are holding in escrow the support to a bond issue, translating that into other currencies. So it's had a very smart kind of niche focus within our company to be at the bottom of the funnel of all foreign exchange transactions, and as a result is 80% of the revenue stream of this group of 4 businesses. Where, when we're looking forward, we want to do the same kind of create the niche for the other businesses to make sure that we're behind all the activities of the company in capital markets, derivatives, and BNY Clearing. So I'd say that's the next phase, that's the strategy, now it's the execution, and that's where we're really going. So from a macro perspective, foreign exchange, we translate or transact 14,000 transactions a day, about $54 billion equivalent. This is across these 10 trading floors around the world. In derivatives, we're one of the top 10 derivatives players in the United States. But derivatives has had a history where 3 years ago, we had a very strong partnership with a company called Susquehanna. Now, I don't know if any of you are familiar with that company, possibly you're even applying for a job at that company, but Susquehanna was the product engine for our derivatives business, and we were the balance sheet and salespeople. But we, at merger, decided that that partnership wasn't going to go forward, so we are really still in the phase of reinventing our derivatives business. Back to Dodd-Frank, the need in derivatives to do a clearing of your derivative down the road, no more over-the-counter, or to a lesser extent, over-the-counter processing. If we can vertically integrate that so that our processing side of clearing those derivatives, we also can become the execution arm, our derivatives business will be more like foreign exchange, be at the bottom of that funnel, being the execution arm for the company. Capital markets, same thing. Our capital markets business has been very regionally US focused, more of a niche player. Our goal now is to globalize it, to set up a broker-dealer in the UK, potentially set up a broker-dealer in Brazil, look at ways to expand our sales effort in Hong Kong or Asia. In addition, to be the clear funnel behind all the purchases and sales of securities that takes place in our global custody portfolios. And that is being done through technology. We're in the midst of creating new technology to make it easy. For a custody relationship, we have this system called Workbench. We just want to add another icon, another portal, so people can go right in, purchase or sell a security. So it's having a strategy, a niche, in a business as well as a whole company to help you survive and thrive and grow. And then BMY clearing, it's what I mentioned before. With this change in Dodd-Frank, we think this is going to be a real growth market to be able to clear these derivatives. We have an organization set up in New York and in Dublin. We're sort of ready to go. But since Dodd-Frank, again, for those studying it, it's not clear as a bell exactly what's going to happen. The rules and requirements are going to be phased in over the course of the next year. So the push send hasn't really happened yet with that business, but we're going to be ready when it does. So here I wanted to give you a sense of, and this is similar to what I did in the other CAO roles, and it's similar to what I did in the client management country manager role in Europe. How do you create a strategy? How do you build an infrastructure? What do you need? What are the hard decisions? So Chief Operating Officer role basically did not exist until I got there in January 2010. So we had that role, and I joined it. The first thing I did after that is I created a CAO role. Now, I knew what a CAO was, I did it. And in that environment of a global trading floor, compliance, audit, risk controls are critical. And a CAO is really important in that regard. They do all the audit remediation. They're doing the metrics around, are things happening properly? We're looking at error rates in foreign exchange processing or even from the traders. So that becomes an important control function. But also in that role, we've added the employee engagement and leadership development activities, which we're really starting. I mean, employee engagement, we have somewhat of a corporate program that we're tapping into, but leadership development, talent management has to be very specialized to the people you're trying to develop. And so we are right now really creating that. And I'd say it's going to be kicked off early next year. Another function which we did not have was marketing communications. Now, when you have a business, or 4 businesses actually that are integrated, you need to create that brand. All of a sudden, inside our company, going from individual businesses, nobody really knew if they were connected, to saying global markets. And you know what you're talking about? That takes some effort. So that's what this group started with, rebranding our business, getting out the message, doing it through the internet, doing it through our various websites, doing it however we could. Actually, we took roadshows around in the first 6 months that I was there. We did roadshows on, who are we in global markets, and I had all the, business heads standing up and describing what they did. A very important component of our model is, although we have a P&L, we allocate back to the businesses any revenue generated by their clients or who they introduce us to, which means that It's both sides are happy at the end of a transaction. We're not competing with their selling of their own products. If they add the sale of our product on top of what they're doing, they get additional revenue in their P&L. So we want to make sure that message was out there too. And for whatever reason, no one seemed to know that when we first started. Strategic planning and innovation. Now, again, having this group grow up in a sales and trading environment, that idea of stopping, in a trading environment, it's nuts. Every day is different, every hour is different, and you have a P&L at the end of that day that judges how well or poorly you did. The idea of looking out strategically over the next couple of years just wasn't a discipline that had been created as part of the routine. It was there for your budget planning, it was there once a year, but it wasn't part of the routine. And it's got to be a discipline you think about every day. Creating innovation, new tools, new services in a trading environment, it's very technology driven, and you have to be ahead of the competition if you can get there. And this takes a whole new set of skills than we really had developed internally. I mean, it's that close alignment with technology, but really bringing technologists onto the trading floor next to the trader so everybody agrees with what that strategy and focus is. The product management. Okay, this is an interesting one. We had an e-commerce group, which was very focused on foreign exchange product. E-commerce being a very high technology-driven, automated trading, et cetera, type of product development. It did not encompass capital markets, derivatives, or BNYM clearing. So you didn't have that discipline. You didn't necessarily create a common way for a client to go in and look across the 4 different business lines. So this became a really important thing to build out, product management, to have disciplines across the 4 businesses and people with a skill set to be able to actually think forward and to meet the competition. And actually be out there in the industry, being on industry panels, talking about what we're doing as innovators. One of the last things that we've done is integrate the foreign exchange, derivatives, and capital markets middle and back office so that we now have a vertically integrated business. The important thing about that is when I first got there, we actually had Deloitte come in and help us look at our business model. Again, COO didn't exist. What did our competition look like? What was the industry standard? How could we kind of jumpstart where we were to where we wanted to go? And what came back out of a benchmarking exercise is most of the high-end global markets businesses were vertically integrated. They had greater control over their operating model. Everyone felt part of the same team. And to politically, internally get this approved, there had to be some discussion. The reason why it had been segmented in the past, and this is a classic way to look at things, is the senior executives wanted to have the control or the operation function in a centralized utility for the whole company. So you build best practices, you have economies of scale, but also you have that risk mitigation, so far away from the front end. So you don't have sales and trading doing some of the funny things that have gone on, UBS a more recent example of where you could lose a lot of money if you aren't careful. However, by creating the COO office, it created that separation, it created that discipline. And as a result, we were able to get it approved. And the other good thing is the new head, the gentleman that built this huge FX engine recently retired. The new head that's come in, a guy named Art Sertasimo, has a very strong operations background. So executive management felt confident that he could deal with it. He could pull it all together. We wouldn't miss a beat. And then another thing, again, with all of these moving parts, you have lots of things going on with Dodd-Frank, the Volcker Rule, this automation of our foreign exchange business, the integration of our derivatives business into what we're calling this vertically integrated derivatives 360. So, the 360 view across the whole company of how a derivative is treated. We need some project management help. So when we integrated the operations people, there was actually embedded in operation a project management group, which I pulled out and now is helping across all disciplines, hitting all the hot projects. And I'm finding there are 3 of them. They're very skilled, but we could probably have 10 of them and they'd be busy. Haven't quite gotten the head count for that yet, though. I don't think I will. And then finally, relationship management and credit services. This unit is really the advocate for credit for the sales and trading environment, which means A sales guy goes out on a trip, he comes back, Banco do Brasil, I want to start trading currency, I need a credit line. Credit department approves it, so it's a centralized utility, but you need someone other than the sales manager to articulate why this is a good idea. What are the risks? Once the business comes in, have a know your customer exercise put around it, really to have some controls and advocacy within global markets so they understand the global markets business, they understand risk, and then they defend the case to credit and then hopefully get the approval quickly. Now I just wanted to move into our outlook for 2012. As most major companies, we're going through a budget process. I think we're through round 2. And we have to really sharpen our pencil here. We don't really see growth being expansive next year. A bit more of the same. Low interest rate environment. As I mentioned, it affects net interest income. Continued pressure on spreads. As the young lady was saying, I don't want to pay $5 for a fee or for a debit card. I don't want to have any kind of surcharge go on my excess balances. Well, that means that spreads continue to shrink, and that the banks or the companies have to be much more articulate as to why they're doing these things so that the clients who are paying our bills understand and embrace the reasons. A low interest rate environment, again, I've already said, adversely affects NII. It's where you invest the funds and what kind of return you can get and stay safe. This whole thing about volatility, volatility can be good for good traders, but it also adds a whole lot of risk. So with what's been going on in Europe, we've had real volatile months, August, September, and now this month looks like, record highs. I don't know what's going on today, but, it's a lot of volatility to control. And as our chief trader says, you have to be totally on 20% of the time, because that's when it all happens, and 80% of the time, a machine can do it. But you don't know when that 20% of the time is. So this adds stress, like you can't imagine, on the trading staff, and as a global portfolio. There are 10 of these rooms. So this guy's got to know what's going on all over the world. In addition, with the increased risk out there, credit appetite goes down. So this is the kind of stuff you read about in the press. The banks are sitting on all this cash. Why aren't you lending it? Well, are you going to lend it to people who are going to pay you back? And if they don't, the bank's going to go out and go under. So, it's a little bit of a vicious circle there. And then, of course, the regulatory environment, the costs of Dodd-Frank, Volcker Rule, and, of course, Basel 2.5. Then just at a very high level, some of the strategic initiatives in our strategic plan. Automation, that's really the goal in FX, automation. Bringing together, even though the trader says, okay, 80% of the time you could automate it, 20% of the time you have to really be on, but you don't know when that is. Clearly, the traders are a little bit nervous about too much automation. But to compete with the big players out there, you have to offer automated tools that can hook right into other client systems in order to compete. And this is all around electronic FX platforms and currency administration, where we act as the administrator behind hedging strategies. That's a big growth area, but it's also a high-risk area because you have to be right. Operational losses in that category can be significant. And then building consistent portal technology across all of these products so that you can go across the 4 businesses at a snap rather than having to worry about logging in and out each and every time. Capital markets, so FX, it's a matter of automation. Capital markets, it's a matter of globalization, building out our capabilities around the world, being able to compete and using this tremendous infrastructure we have of custody clients, asset servicing clients, in order to pull in the capital markets products and services. And that's with the concept of partnering across the company, partnering with these other core business lines. And derivatives, it's really looking at the strategy, hooking it into this D360 concept, and being a very positive spin on the whole Dodd-Frank. And then I'll finish up before we're going to hit a video link on what we consider core competencies for our leadership. And frankly, these are things I look at with students coming out of school. Are these areas that they either have developed or they would like to develop, or are these things that are somewhat not on their list? Global acumen, as you saw, our business is extremely global. And frankly, that's one of the reasons I was so excited to join the global markets area. My background was very international, and I'd say this is the first job I've been in the US where I have global reach every single day. Global acumen is really important. Establishing strategic direction. So that really means not only a strategy, but where you're going with it. Don't be short term. Try to figure out the next 3 to 5 years. But if it doesn't work, don't worry about adapting that strategy. But it's really good to have a roadmap. It's something you can work from to build. Building organizational talent, and right person, right job, attracting and retaining talent, those are critical. There's no one person that can do all of this ever. You need to build the team. And that is truly the difference between great managers and okay managers. The managers that think they could do it all themselves are technically or probably the ones that'll fail, as smart as they might be. The ones that find the right team, probably smarter and more ambitious than they're going to rise with the wave. Driving execution, great to have strategy, but if you don't execute it, it is not going to help you. So driving execution is critical. Client orientation, and when I think of clients, I think of external and internal clients. The first 25 years, I was focused on external clients. The next 6 years, I've been focused on internal clients, and I treat them the same. And that's what makes a difference. If you are in an administrative or a staff-type job, you have to be as proactive and aggressive with your internal clients as you are with your external clients, or you'll fail. Change leadership. With everything going on, all the different things I personally have been through, but from what you know, from reading every day in the press, the world is continuously changing. And you can't just sit there and it happens. You have to lead the change. As a manager, you have to drive the change forward. And it's not easy, because some people who are used to doing things the same way and are in a comfort zone, to get them excited about doing something differently and having to learn new skills, that's an art. And that's something that is critical in today's environment. And developing strategic relationships, this really comes down to networking, both internal and external. And one of the conversations we had at breakfast today is make sure that network is strong in good times so that you can go to them in bad times. The most difficult thing is if you're already in the hole and you're trying to crawl out and you're going and asking for a favor and you haven't had a warm bridge, it's a tougher conversation. So really keep that going. So with that, I want to turn on to this video clip and then open it up to questions. Now, this clip is something that we used in a leadership program I ran a year and a half or so ago. It's a little bit old. It's from 2010, but it's still very relevant. So key message is change is happening. Learn to adapt and thrive within it through innovation, focus, and hard work. And you have to be able to think. Because what this is kind of saying is a lot of what we all learn in school changes so much by the time we get out that we have to start again. So it's really important. So that's it, and I think we have open for questions.
Okay, we'd ask if you have questions, if you'd come down to the microphones. We would like to record the questions. So do I have the first question out there? Oh, quiet audience today. Well, let me open up with a question. There recently, in our recent history, we've had a lot of the bank bailouts and from the federal government. And what was the role that BNY played in that, and where do you see, how successful was that, and where do you see the future based on that?
Well, looking at 2008, which was really, that was sort of the peak of the crisis, as I mentioned, we were clearing the majority of government debt. So we were behind a lot of the banks, like Lehman, clearing their securities, Morgan Stanley, which at the time had some issues, et cetera. So we took a very active role in helping the federal government calm the waters. Absolutely, through managing the all of this liquidity that was sitting in bonds that weren't necessarily liquid. So as sort of experts in that field, we partnered with the Fed and with the regulators to calm the water. Now, what was successful, what wasn't successful, I think as far as we can see, a lot of it had to be done, or the crisis could have been even worse. But now we're still, we're in the financial sector, we're still having difficulty. And, I really do think it's all the increased costs in litigation and in regulation. And many of these laws were already there, but were they applied properly? Were the Fed auditors auditing properly? Just slapping new laws on, I don't know if that's the total answer. It's back to, even if you're in an audit function, strive for excellence and make sure you're doing your job so you don't have to slap another rule on because you weren't really analyzing the rule that's on the books today.
Do I have anyone with a question? Good.
Hi. China's economy is growing at like double-digit rates, and I saw that you obviously have a strong presence there in all their major cities. Do you see that as an emerging market that BNY is trying to tap into more as they come up in the world?
Yes. So China, we have identified key countries around the world as growth markets. China's one of them, needless to say. Sure, we and every other competitor out there, but it definitely is. We recently, in Shanghai, opened a trading room. It was completed at the end of last year, first quarter this year. I'm actually going out there in about 2 weeks. The market itself, the currency market itself, is still just developing. So what we're going to be putting through it immediately, it's really an evolving marketplace. We are also looking actively to expand our asset management activities there, and we're doing this through partnerships locally. Over time, will we acquire something, yet to be known, but definitely now through partnerships. And then if you look back at our history, some of these core, traditional, correspondent banking products, trade finance, cash management, China's a big market for that and has been for a long, long time because of all the trade flows around the world. So it's definitely a growth strategy market. We aren't doing as much as we'd like, but we're setting up the foundation.
As a follow-up question, as China's emerging and becoming more capitalistic, they're currently kind of getting their capitalist structure together. It's kind of still the Wild West over there. Does BNY ever run into ethical issues, or does it see any is there any nervousness about being over there?
Well, I mean, many markets around the world, you could say that. One of our biggest depository receipt markets is actually Russia, and that's been the Wild West for quite some time. I'm not close enough to China to give you some stories about what we've seen, what we haven't seen. Our activities are run by local management who know the market, certainly know our ethical code. As far as I know, don't step over the boundary, but you've got to be alert. And clearly, and that's a whole other thing. When I was in Mexico, it was a different way of dealing. One of the things the professor, actually I had here, Professor Langford, advised us, I mean, this is the kind of thing you probably shouldn't be taped on, but advised us that in your wallet, always have a $10 bill when you're driving, because these guys, the police, are going to stop you for nothing, and you hand them your license, they'll take out the 10 and let you go. That was Mexico. That was our professor. So, you have to deal with the market, but to do something against your ethical code is obviously not going to work.
Thank you.
Sure.
Okay, we have a number of students here who will be either graduating this year or next year. Where do you see the job market, in particular with the Bank of New York, both from the internship perspective and full-time opportunities?
Well, Bank of New York Mellon has about 50,000 plus or minus people around the world. And we have a very active summer internship program. In the global markets area alone, we had 15 summer interns, and we only had 200 people on the floor. Our total global markets population, and that's now even with the integration of operations, is 500 people. And in New York, trading floor, they're 200. So we had 15 interns on the floor. The corporate program in the summer, it's like a combination. You actually get hired into the business line day job, so potentially you could work for our middle office or work for our marketing communications or as a trading assistant. But then there's a corporate wrapper to that gets you exposed to all the other major businesses through lunch and learns, evening events, et cetera. So it's a really good program. Something I've started in global markets, really because we needed more hands on deck and we didn't really have it. Also because I had that kind of experience when I was in grad school, is a sort of a continuous internship program. So some schools offer students a semester off during the year, not just summer. So we'll bring them in. Drexel happens to be one. Dartmouth happens to be one. We also have been hiring students from colleges who have graduated. They didn't really land where they wanted to land yet, and we'll hire them as a co-op or an intern. We're allowed to have them in that space for up to a year. And then if they're good, we find them a full-time job. And we've successfully done that in the last year with two students, one from Rutgers, one from Princeton, into the mainstream of global markets. I'm talking very much global markets, 500 people. The bigger groups like asset servicing, 17,000 people around the world, FMTS, 11 to 12,000 people around the world. They have even more internship opportunities. I think we have run about 350 across the company during the summer. And this full year co-op internship program, I have to admit I've been sort of doing that myself, but it's starting to catch on in other groups as I'm talking it up, because it's a wonderful way to bring in sort of a fresh pair of hands and to have that period when we get to know each other and decide we want to make it or not. Now, industry-wise, I think the banks have really cut back. In the financial sector, the banks have really cut back. When my son graduated in 2010, and JPM, Barclays, Credit Suisse, Goldman, I mean, they were hiring lots and lots of students. And what I'm hearing out there is that it's more restricted. Where I do think there are some opportunities, though, and you take a little bit more of a risk, are some of these hedge funds that are starting up. I mean, they're dying for bright, helpful people like yourselves, but you take more of a risk because they don't have established programs. Potentially, they don't have a strong training. It's really on-the-job training. But if you have a passion for that industry, you can take a risk.
Anyone
yes,
else? There we go.
I'm not going to sit back. I was born in Africa and I spent the past 10 years here. And Africa is a continent of over 2 billion people who along with your banks, function almost on a cash basis. What is Bank of New York Mellon, a custodial bank, doing to capitalize on all this cash in the business?
Well, when we look at our 100 global custody sub-advisor relationships, so the sub-custodians, many of them are in Africa as well. So basically, the way that business runs, it's wherever the investor, so it's not we're making up who we should set up a relationship with in a local marketplace. Wherever the investor wants to buy or sell securities and hold in custody, we then set up a partnership in the local market. So, certainly South Africa, there's a lot of activity. I don't have off the top of my head exactly which other African markets we have it. when you look at cash, and collateralized business, collateralized, whether it's in a custody environment or in a corporate trust environment, that's a growing piece of the business. As risk escalates, having collateral is something, a financial institution is going to be looking for. So a cash risk counterparty is going to be good, because then you're going to be able to get what you need, and then we'll have that protection. So I'm sure I should do more research to give you a clearer answer, but we react to what our investors want rather than make it up.
Any more questions out there? Or, if not, I have one more for
Sure.
you. This one, I'll talk a little bit so you give you a little time to think about the question. We live in a very fragile economy right now, and a lot of the country, and based on your first photos of the Wall Street set-in, either blame the banks or look to the banks to be the leaders in taking us out of these doldrums and to improve the economy. If you had the power, what would you say would be the tool or the series of activities that the banks could help to make the economy turn around much faster than what it is doing? What's holding the banks back right now?
Well, I think heightened regulatory environment is making us be much more careful about not breaking a rule, and we have to understand the rules. So that kind of puts the skids on being innovative. I think we're getting through that, but that's definitely out there. As far as much more aggressive lending, I think it's a question of the credit risk. I mean, what's happened in the mortgage sector is because the people who took out the mortgages couldn't pay them back. I mean, you can blame the banks for not doing more due diligence. You can blame the investment banks for packaging junk and selling it as AAA. But the real story is the underlying house mortgage person did not pay the loan back. So, I think you have to take all that into consideration and make sure wherever the banks are going to lend, they're going to get paid back, or the bank won't be there the next time someone asks for a loan. So I think that's really important. But I sort of get back to the question from the young woman on that charge. I think banks have to do an awful lot better job communicating externally as to why they do things the way they do, why they're doing things properly or not, and make sure it's practical. It's at a level that everyone understands what they're saying. It's not bank speak or that type of thing. I think it's the communication coming from the banking sector. Really, we need to do a better job and make sure that everyone understands what we are already doing. Back when you look at the city of New York, if you take away the banking sector, I can't imagine what's going to happen to the real estate market, to the commercial, restaurants, to the big department stores. I mean, bankers are part of the engine of New York, and so I think people have to be aware of what they do bring already to the economy. But I think that clarity is sometimes lacking.
Speaking about the fragility of the economy that Dean Gaglio mentioned, I'm curious, you mentioned derivatives quite often with BNY, and I'm curious if you personally or the business is at all concerned with the derivatives bubble. And I mean, Warren Buffett referred to it as the financial weapon of mass destruction, and then I think French President Chirac referred to it as financial AIDS. And I'm kind of curious, you guys.
Financial aids. I missed that.
Well,
part.
yes, it's graphic.
Yeah.
However, I am curious. You mentioned it quite a bit. I'm curious about your company's stance on derivatives, and if you guys are at all concerned about the fact that there's so much money in this product, I guess, if you want to call it a product.
Well, I guess it comes down to the basic, why was a derivative created? It wasn't to be a wild cowboy and go out there and risk money. It was actually to hedge a bet, to lock in an interest rate, or to lock in a currency, to offset, if you have a cash flow and you want to be able to pay installments over every 3-month period, but the way your business is structured, you can't do that. You buy a derivative to help you accomplish that. It's actually to protect people. I mean, that's actually how it was created to begin with. The fact that it's gotten much bigger and the words thrown around for every kind of excessive risk type instrument out there is a shame. And I think it comes back to communication and clarity. And I think it's important that bankers, sort of decode the way they're talking about these things and explain what the derivative really does. Initially, and the way we deal with it, we're hedging things for our clients. municipalities. One of our newer products is municipalities that have spikes, peaks and valleys in their energy expenses. Well, derivatives is going to help even out that flow, that cash flow. So the municipality doesn't in the winter all of a sudden have to have 100 million, and in the summer they don't need anything. So it actually helps the client. So I really do feel it's back to the communication and the lack of simplicity in our terminology.
Thank you.
Okay, do we have any last questions? Regina, we want to thank you very much for coming.
Thank you. Pleasure.
I would like to say that she graduated in 75, she came back in 85, she's now back in 2012. You've got to come back more often.
Yeah, that's right.
Okay, thank you very much.
Thank you. Thank you, everybody.